Hello guys, welcome to the Trading Parrot. With the recent pullback from 110 to 91k, we have done a full move from the top of the range to the bottom of the range. And since then, the price has been a full week with closing prices offering a spread of less than 1% between open and close. And in my opinion, this is all to do with the event coming tomorrow. The fact that we have a data heavy week. We are just reflecting the uncertainty of how the Federal Reserve is going to react to previous week unemployment rates, to the actual inflation rate for consumers, retail reports, and producers. All of that does matter when it comes to deciding what's next in monetary policies. And although that pretty much we already know what the Fed is doing as a pre-reaction to those public news, which is 2 weeks of reducing their balance sheet, having known that, understanding what is that concept, we're still going to look at the price action and see how the long is doing, because at the moment it's in quite a critical state. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. You know that I'm in a quest to get 1,000 likes in a single video. We have gotten to 800 likes so far, and I'm quite stubborn because there is literally no retail at the moment. The views across all crypto channels are affected by this. I keep an eye, not just on Google Trends, but I look at how other channels are also reducing their views. And I can guarantee you that if we compare views from late November into beginning of December, where I started having some videos with 15,000 views and over 1,000 likes easily, now it is a struggle, and the same goes to the other channels as well. In my opinion, that is something bullish. As I usually explain to you, as kind of a social alpha, the less people watching my videos at the times I come up with an entry or some alpha, the easiest we go into profits. When all retail is here and they support my buying entry, that's when we become part of the retail, and it tends to become a bit more difficult. A couple of times we had to add to our position to go back in profit. Aggregated open interest, no update. The open interest is still pointing up. I'm still looking for recovering above 28.6 billion resistance, so we can potentially get a similar effect as in August breakout from the megaphone pattern. We are minus 5.78 for the month of February. Some people were claiming that the hash ribbons already print a buy signal. I check on this chart and I check on other charts and I don't see any buy signal. Remember that this is a daily time frame indicator. If you're using it on the 4-hour and you're seeing signals, I don't take those in consideration and I wait for candle close to confirm any buy signal. So if you are seeing that the buy signal comes in and out, that is because the price is moving and the hash rate reading is also updating. So let's wait for candle close tonight and let's see if we get that buy signal, because that will be really sweet. Let's go into the 4-hour and you can see that after the breakout we are here. We have already broken a tiny bit below the ascending support, which if we place correctly, you can see that we broke at 47 and the support was supposed to be at 49 more or less. At the moment we are being held from a threat from this support coming from this trend line, which represents now support, but it used to be the global resistance. As I mentioned probably in the past 2 videos, if we come in here and we break this, or even if we come down, I accept up until certain limit, because the deeper we go back in here, the less likely that we can exit and continue to the upside. So although this is not something bullish, I wouldn't say it's yet the end of the world. But certainly it implies pay attention, because this could escalate and no longer be just a mild bullish signal. Looking at the price action, you can see that this is quite a bearish candle. In a single 4-hour, we moved from 98.1 all the way to 96.6. My entry is 95.2. Some people enter at 94.8, which is great. So overall, still in profit. I am targeting the higher liquidity. And if we start selling off, my plan has always been to add more. So I'm going to stick to that plan. In the morning, I gave you a very quick update explaining at the time time that we were still at 98 or above, that this line of resistance is quite heavy. You can see in the title of the video, Tough Resistance Work in Progress. And you can see in there how I'm showing precisely that line and making you aware that at that point we have some ask liquidity at 0.1. It wasn't that much, but something must have spooked the markets at some point right there at resistance, making it a lot easier to pull back from there. Now, it all depends how we interpret this. We could say that this is one wave and then we are finding a pullback in there which is higher than the 50% retracement, so still has potential to continue up. I also mentioned in the morning the formation in here of a potential double bottom, slightly larger than the initial one that we found only place in this area. Therefore, we updated the target to 102. But since we have had now this rejection, it puts this whole idea at the very least in a pause rather than saying it's impossible. That target is pointing towards the next order block. So this one was already a tough resistance. If we manage to continue with the upside, then we need to be looking into that 102. Notice as well that the PNR, the support, if breaking below this, is pointing at the moment at 27, and I have that in the price, which is now at 92.4. Depending on how fast we get there, if it takes a little bit longer, probably is gonna meet with it at around 92.5, taking some time to get there if we go there. Of course, we are right now with a candle in progress and price is making that decision as we speak. On the daily, I'm gonna tell you how I would like to close the daily. Of course, tomorrow is a big day with the inflation rate report, but after we have this green candle in here, finally being above the point of control, the next step with this rejection is hopefully for the bulls to step back right from here and defend the 96.9. I will say 97. Let's defend 97 daily and have a close above that thing. Let's not go back to the area of the rejection of the point of control. We do not want to be in the range on the lower end. That also increases the chances that we complete the M pattern, and then we start needing to look for patterns like this, which is the technical target of the M pattern, or like the typical liquidity hunt and then reversal from somewhere in the middle. Open interest is still in the area of the buy below the orange and coming from the bottom into the range again. No developments from large holders. There's been no reversal of all those additional deposits, 70,000 that we had last week. Almost no activity, neither withdrawals or deposits, and that's why the stochastic is kind of cooling down towards the moving average. Let's remember that if retail sells off as a result of any fears coming from the reports, any of the reports this week, 91K is the short-term holder realized price. Going in that direction and potentially beyond that direction, it is possible, particularly for this cycle where we don't tend to respect it that much if we pinch it. In the beginning of the bull market, it was holding us, then we pinch it for a little long, then for very long, and in the megaphone pattern we spend months below it. So if we were to pinch that, do not expect the perfect performance as 2015 into 2018, where every time we got close, we spent one day below it and back above. That's probably where people started thinking, let's use the short-term holder realized price as a metric, as an alpha. But you can see already in the previous cycle, it was already messy. This cycle is all over the place. But still, price can go in that direction, maybe not bounce perfectly from it. Yesterday there were some outflows on BTC ETFs, not huge, but just 186, leaving the top of the cumulative flows flat at an all-time high. And from 43 in the greed and fear index, we went now into 47. I suppose that's influenced by the move up. We still have the warning buy. If you missed that signal, watch my previous videos to understand. I explain it pretty much in every video where I talk about Cerberus. If you want to get access to my indicators, you can go to the tradingparrot.com and get a VIP subscription, which is going to give all of them. You can browse and have a look if you go to the tradingparrot.com/charts and see one by one and copy the charts that I use in my videos. All right, let's go into liquidity and let's do some surgery to the order book. In the short term, you can see in here that this retracement at the moment is having a feast with the small liquidity that was created by longs entering at 98 into the resistance of the order block. Not being aware there is an order block there and that there's usually supply caused them a big mistake. I made you aware in the update in the morning of a tough resistance around here. It did play out. We have retraced so far 2.18% and we are running out of this liquidity. And why am I paying attention in here? Because if we run out of this liquidity in here and price carries on going further down, to me that is an indication that what market maker actually wants to do is to hit a new low, and that starts from 94.5. Last time we did that, I speculate that this was going to be a great entry just because of being quite heavy in the longs and other confluence with indicators. In this case, it's not that heavy. There's really not that much incentive to go there. But if the general markets are bearish and people are scared of what's going to be the news tomorrow in the economic events, that could be reason enough for having a slightly deeper pullback. On the longer term, there are no really important changes. Everything is still the same. In the last 30 days, you can see that around where I have right now my entry, we have some liquidity of people that entered there, and the price is at 96.7, more or less 2K away from the entry. A similar level of liquidation, it's sitting slightly below 99K and a way bigger at 100K. 106.4 is the largest of the past 30 days. Funding rates are very aggressively going down, but they're still not in the negative. That's why we don't see a band of red in here, which is usually something that we use as an alpha. I suspect that price needs to get correct slightly deeper to get that negative funding rate. And you can see that now the longs are kind of reverting this retracement that we saw in the morning. As we were approaching the 98, the longs were pulling back, but as we go back now into 96, they are aggressively coming back and re-entering, not yet putting a high relative to 69, which is the highest level of longs that were buying the dip at 91. Then the next peak of longs was at 68 when they were buying 95. Ask liquidity has remained at around 0.1 in average in this area in here since more or less the bottom, and they've been trying to short that, but not with too much ask liquidity like in other levels in the past where it was a clear top. I will interpret this as people are just trading the range in preparation for the event tomorrow. This is more or less like having a little fun before the real game. And at the same time, of course, market maker is trying to trap the most people in the wrong side. Liquidity from liquidation pools, the delta is at the moment affecting more the shorts, putting them at higher risk, but is very flat with just 128K. And you can see that finally, the orange whales are starting to retrace with their aggressive longing. They've been responsible for the move of 95 to 98, and now they're starting to roll over. You can see that those are the smallest ones. The rest of the whales are not doing much, and that is the reason, or the main reason, that has been worrying me about this move up. Still, I made my bet and I took the risk with entering with low volume with the plan of accepting being wrong and then adding at lower levels, which I'm still not convinced yet that I'm going to need to do. On the upside, resistance is at around 100K with 41 million. Below the price, it remains really flat with volumes ranging from 10 million, 7, 15, 12, 15, 9. So really shallow on the area of the support. But also resistance is not very heavy, it's just 41, 36, and then at the top 45. Previous days we were seeing in the resistance 60s, 70s, and over 100 million. So I don't know if they are not yet positioned for tomorrow. What sort of trick is this? Or if the actual platform is broken. Let's look for confirmation on Trading Light. Remember that all these tools, third-party tools, you can find links in the description if you want to give them a try, or you want a nice discount. I have the best discounts. Every time I show any of those links, I always ask them to give me the best deal that is available for their platform, and I hope you enjoy that. So yeah, at 101 we have two levels of 700, so that's quite heavy there at 101. It's almost like they are expecting the price to get there. That's how I usually interpret that. Then we get 102, and we can also see that the 105 was shifted down into 102. At the same time, this reduced from 600 to 300. This one increased to 400. Below the price, there is support at 91. But again, it's just 400. It's not very substantial compared to all the support that we had in here when we pinched last time 91. Delta longs versus shorts, you can see that we are now similar to what we were doing since late December into 23rd of January, which was just flipping end to end on the top of the range. Now we are flipping on the lower end of the range. I'm still looking for an entry at my area of value, but price action doesn't want to give me the perfect entry. The best we got was around here, and then we have the breakout, which I did use for my entry. Fair value gaps, you can see that we produce a new fair value gap right above the price, spanning from 97.9 into 97.1. Price continues going lower, and this fair value gap is created thanks to the aggressive move down, creating imbalances, and potentially later we should be seeing it getting consumed very quickly, in theory, because they act like a magnet. An update on my target for gold. This is covering a little bit of general market, which I haven't done this week. From this double bottom formation on the RSI weekly, I was calling for a rally into 77 RSI. That has been there for quite a while now, more or less from the time we broke out from the symmetrical triangle, and you can see how close we are getting at 2.941, and the actual target is 2.965, so we are $20 away from reaching the full target of that. Can we go higher? Well, I think it's low likely, because we are doing just this rally in the context of being against resistance after having broken down. This is kind of a setup that we have done multiple times in the recent past. The one that comes at hand was when we did it with Solana, going into $270 thanks to a similar setup than this. And now gold. DXY is still ranging here. Remember, we have kind of a head and shoulders in here, so I'm vigilant whether we break down from the neck, targeting an RSI of 42, which can bring the dollar index to $104. VXY is getting closer and closer to the bottom of the range. Remember that the closer we get to the bottom of the range, the more likely we are about to see another expansion of volatility. And that is perfect timing with all the data incoming this week. Moves from one extreme into the other extreme usually are painful. Bitcoin tends to find a local top when the VIX is finding a bottom closer to the bottom of this range. So being at the bottom of this range is not necessarily something bullish, I must say. Nasdaq and S&P are both battling with the all-time highs, but at the same doing all of this in the context of putting new bearish divergences. Nvidia is doing something very interesting, and if you remember in this area in here where we broke below the 21 weekly, that was quite scary, and the signal, the bullish ones, is to recover above the 21 weekly. At the moment, we have 2 weeks rallying into that resistance of the 21 weekly, so all eyes on this event, because I don't take necessarily for granted that Nvidia is just gonna do the same thing that it did in this area where we are earlier in the rolling over phase. At this point, you recover and then you guarantee that you can put a new high in a channel coming down. But later in the rolling over phase, with the channel still going down, what you're risking is huge, because you might still put a close above the 21 weekly, but maybe this is the time where your highs don't manage to take the previous high, and then you start rolling over and creating a big major pullback. People love to see this pattern, then seeing this, and they take it for granted. Sure, we're gonna do it 3 times in a row. Why not? Nothing to worry. In my opinion, when a pattern plays out a couple of times, the third times I start getting a bit nervous. And Tesla is doing the opposite. It's actually losing the 21 weekly, potentially this week. And the Hive signal seems to be playing out pretty nicely with a target to $311. All right, let's finish the video and I'm gonna give you a summary of where I am with Bitcoin. I think on the 4 hour, we may have a little bit of that volatility that we were expecting at the beginning of the week. People are trading the range. There are still big events coming in the week, and I don't expect this to be easy. From liquidity, this to me doesn't really seem like a very attractive level, but if we go there, it's okay. We do have our plan at the low 90s to add more. This was a low volume entry, and we are already preparing fair value gaps for a potential recovery, even if we put a new low. So that it is all just as usual. Let me know in the comments if you are sitting on your hands, if you are waiting for certain prices, or if you already enter, at what prices you enter, and whether you are getting nervous or anything. Guys, if you want to trade Bitcoin, altcoins on excellent exchanges, my preference is Bybit and OKX. If you use the links in the description to open a new account on them, you can claim up to 60,000 on OKX and 30,000 on Bybit. If you want to stay away from KYC requirements, I have two non-KYC exchanges, Bluffin and 2bit. Either of them are offering great packages. Bluffin is offering 100,000 based on trading volume and deposit size, and 2bit 30,000. I remind you, tomorrow we are gonna cover the inflation reports with the live stream. It is already published on my YouTube channel, so you can go ahead, find the next stream, hit the like, and leave some comments. All of that really helps the channel, so I always appreciate it. Most likely tonight I will do another update to see the new developments with the price. Hopefully we have some good news. I'll see you later. Take care. Bye bye.